Hello and welcome back to a new video. Today I want to talk about a technical analysis concept, which is a little bit more of an advanced feature of trading supply and demand zones. And for now we will call it reaction points or trading origins of supply and demand levels. So first of all, when it comes to finding reaction points, then we look for strong movements and very large candles away from one area. Preferably those candles or those move exists or are being created after a consolidation. So here is a very nice example. You can see that price has been trading sideways with very small candles, and then suddenly price shot up with one very large candle, and then it moved higher along the outer Bollinger Bands, as you can see here. So this would classify as a reaction area. And what is even more important and more interesting about is that you can see before price moved higher, it made an attempt to move lower. So you can see here very small candles, and then suddenly price showed a larger red candle. This has probably then tricked a lot of people into assuming that price is breaking to the downside. This is a very common trap behavior, and afterwards you see a sharp reversal to the upside. This green bar here is already engulfing this red candle, and then afterwards you see this huge spike. And once you see this large move away from this, you can then mark this reaction area on your charts. Usually I draw my zone from the bottom until the top of this range here. And then what happens is when price trades back into this area, it finds support again, because what has happened here, there was a very large imbalance between buyers and sellers. Very strong buying and selling was going on here until there were no more sellers left and the buyers drove price higher. So when price comes back to this area, you can expect that there is still a lot of buying interest in this area. Not always does price completely reverse and move up, but you can also use this information for taking profits or managing your trades. So for example, if you are short here after this reversal signal, then you can probably very safely assume that your short trade is going to face a lot of opposition here once it enters this reaction area again. And as you can see, price dipped into this area 1-2 wicks, and then it made a few more attempts to move lower. It did not have enough power because this was a very strong reaction area, and then price moved higher. And even now when we extend this bar or this zone, you can see price is dipping back again into it and found buyers again. So this is a very classic move. You can always look for those small consolidations where suddenly price shoots up. If you get a trap pattern, even better. And you can see this pattern all over again. So here, for example, another one. Price moved very sharply lower from this area. You can see here price, when it moved back into this area, even with such a long green candle, it found resistance here and it stopped its move higher eventually. So again, don't use this area to just enter a short trade here, because price moved short from this area here as well. But you can also use this very nicely for taking profits or setting your targets on your trades. And you can see this all over again. So here is still a fresh area. You can see price moved higher from this little consolidation here. There was a little bit of a spike lower, not very strong like what we saw here, but nevertheless a very nice reaction formation. And when price comes back into this area, you can probably expect that price is going to show some type of reaction here and not just brush through it. And you can see this all over again. Here a very strong reaction bar. Again, we did not get the fake out or the squeeze, but very nice. You can see how price catapulted higher from this area. And then once it moved back into this area, it did make its way through it eventually. You can see a lot of reaction here and lots of trading. And then price just consolidated sideways afterwards. And you have those patterns everywhere all over again. Here as well, small consolidation. Then here you actually get the spike into a lower area. And very interestingly, when we look left, where did the spike end? Of course, in a reaction area as well. You can see consolidation, lots of trading activity, and then suddenly price spiked higher. So this is a very nice reaction bar, and this fake out ended here in this area. Afterwards it moved higher and then created this rally. And you can see this pattern everywhere all over again. If we move back, you can even see it here. Very nice long red candle. And even more interesting here, before the sell-off we had a little consolidation here. Some people call it a supply zone, and it doesn't matter what you call it. In the end, it just matters what it shows you and what it tells you above price and price action. So this is then your reaction bar and reaction zone. And then when we move forward, you can see this is the area. This large spike ended here in this reaction area and then consolidated sideways and lost its bullish steam. And of course, it does not always work. You can see here we had this consolidation here, then move higher, and then eventually we sold off. We rallied. It's not a very strong rally, so this could have been already a warning sign. And once price moved back into it, then it just broke through it. This is probably also a news-driven candle, so it's not an ideal setup, but I just wanted to give you an example that price or those reaction bars don't work all of the time, and nothing really does in trading. So it's important to understand how you use this information and not just trust it blindly and expect a 100% win rate. And of course, we can go back in time as long as we want. Very nice here. You can see little consolidation. Price tried to move higher, even showed this trap to the upside through the outer Bollinger Bands, and then it sold off with two very strong candles. Price came back into it, retested it, but it did not have enough bullish power, and then it sold off eventually. Here again, consolidation, then a move lower here, 2 red bars, then price shot up, very strong candles here. Price came back into this area, a lot of opposition. The sell-off, even though it was very, very strong, and it's coming from another reaction area, it did not have enough power, and then it just drifted sideways here. And this pattern repeats itself over and over again. You can see it across time frames and markets, and it's just a great pattern to be aware of. And even if it's not your core trading principle or your core trading method, you can use this information to draw your zones, to use it to take profits, to set target areas, and just to analyze price and charts a little bit better.